I hardly asked a good question because I think this is sort of interesting to what I do. He asked me what's the lowest time frame that I trade, and yeah, thanks, genius. The lowest time frame that I trade is actually none. I don't trade time frames. When you see my charts, they have sometimes 60 minutes, sometimes hourly charts, but I trade price. I don't trade time. Sometimes, as you can see, my trades can take as little as 15 minutes to take to actualize, and sometimes my trades can take as long as 15 hours. Because as long as I'm in the setup, and as long as the price is there, and as long as my stops are not hit, I'm in the setup. If you think about this, we don't trade time. We trade price. It's just price traveling across time. And sometimes, there's a great joke about time. The chart I look for is basically a 50-minute chart, but the bias to me again is based upon price formation, not necessarily chart formation. So there's this great joke that Albert Einstein used to say. He said that when you're talking to a pretty girl, a minute can seem like a second. And when you're holding your hand on a hot stove, a second can seem like an hour. So time is all relative, but price is always absolute, and that's why I focus on time. I focus on price. Lately I've been looking at hourly charts, not necessarily because I couldn't care less about what the hourly formation does versus the 4-hourly formation. It's just simply that it tends to just compress a lot of information. It's just a convenient way for me to look at charts. But again, since I don't use indicators, time is of no essence to me. The only time that is important is really session time. The other thing that's very, very important when we're looking at trades is that, and as always, this is always a rule that has lots of exceptions, but I'm just going to make my screen bigger so you guys don't have to watch all my stupid on my desktops. Sessions, as far as time, are kind of important. The critical session that you want to watch is the London to New York session, which is about 4 a.m. New York time to 4 p.m. New York time, which is 8 GMT to 20 GMT, I guess, as the critical time. But one of the things that I find very interesting is that even that assumption is under assault quite a lot lately, because a lot of times you can assume a position sort of late North America, and if the flow is on your side, if the dynamics of trading are sort of on your side, Asia will very often take you out into profit. So dismissing Asia as a sort of a source of trade, I think is kind of foolish at this point. And I think it's a testament to the fact that Asia, of course, is a much more important market than it used to be. There's a lot more capital there, and it may be a situation where the real dominant session 10 years forward will be the Asian session, and we'll just be mopping up the end. As always, London is going to always sit in the middle and always collect money from both sides. So if you're sitting in London, I think you're pretty safe, since you managed to make money both ways. So Blakey's asking a good question. Do I mean trend when I say flow? In the narrow sense of the word, the answer is yes. What I mean by flow is basically momentum. It's really a synonym for momentum. It's sort of where is the price going, and the assumption is that more times than not, if the price is going in a certain direction, it will continue in that direction rather than reverse. The classic trading assumption is to always bet on reverse, right? Traders always love to sell tops, buy bottoms, because they're always looking for value. They're always looking to buy cheap. They're always trying to find sentiment extremes. And of course, sometimes that works. But I think the irony of the whole thing is that most of the time it doesn't. There's a reason why majority of retail traders always lose money, is because they tend to always fade the dominant price flow. I mean, how many people tried to short the euro on Friday when it started to rally? How many people tried to short the Aussie on Friday when it started to rally, and it just rolled over you like a 10-foot truck? And this is very, very emblematic, I think, of how most people trade. Most people hate the idea of joining the crowd. Everybody can see the euro dollar chart, right? Let's go to everybody's seeing the euro dollar chart, right? Okay, super. Just want to make sure that we're all seeing it. So just just to give you an idea, when you're looking, just without even just analyzing anything, what you can see is bursts and counterbursts, bursts and counterbursts. The whole idea is that when the burst happens, it tends to always have a counterburst. So the problem is, how do you absorb the counterbursts, the counterflows, and still be able to try to benefit from the general direction of the move? I haven't been able to find a better way. If you guys have one, I'd be happy to hear it. But the only way I find it is to trade with no, I don't believe in support. I mean, first of all, what looks like support then becomes broken as support is meant to be broken, and fibs are nonsense. Fibs are artificial lines put onto a chart that have nothing to do with actual trading. I mean, nobody ever, no big bank ever says, "Oh my God, I'm at 78.1 or I'm at 61.8 of my fib retrace, and therefore I must stop." I mean, fibs are good in the sense of like, okay, if a price retraces a third of its move, which is approximately the first fib level, then yeah, you could probably assume that there's a relative level of support or resistance there. But I guess my point is, I have not been able to find a better way than to trade with a 1 to 2 risk reward. And the problem with that is that you have to set your expectations to the right level. Let me give you an idea. Let's say you're trading 25 profit, 50 stop, right? 1 to 2 risk reward, which is the maximum you really want to. You never want to go beyond that. It's sort of like the maximum how you want to stretch yourself out. Well, under those conditions, in the best possible scenario, you make 10 trades, or let's say you make 11 trades, right? And you're going to make 25 points. So you're working for plus 25 points out of 11 trades. That may seem like a lot of trades for very little points, but that's life. That's reality. That means, if you have that kind of a strategy and it's making you 25 points every 10 trades, and let's say every 10 trades takes about a week, and you're making, 200 points a month, you are doing extraordinarily well, much better than most anybody else in the market, because your drawdowns are relatively low. You're able to contain, you're basically trading around 0 to minus 200 basis points of your net equity because you're taking small stops, but you're not going to be able to ever in a situation where you're going to make 10% in a month. I'm talking about no leverage. I'm talking about completely unlevered. If you can make 200 pips unlevered in a month, you're doing extraordinarily well. And to do that, you have to make 25 to 30 trades. It's like everything else in life. You have to work very, very hard to get very, very little scraps of food, but that's what feeds you and your family in a way. This whole idea of like, I'm going to make one trade, make 5,000 pips, or I'm going to make 100 trades and make 5,000 pips. I want to see the guy who does that more than once, without his hand on the keyboard. I mean, without hitting a lottery ticket. It's just unrealistic. So one of the most important things is that even when you have a great setup, you're going to lose a lot, and you're not going to win a lot, and you have to have a very realistic expectations of what winning in FX means. To me, winning in FX means making 200 pips a month, which is an extraordinary. If I can do that every single month, I'm extremely happy. I'm happy if I'm at 100 pips a month positive, I'm happy. That's winning. Any guy who tells you he makes 1,000 pips a month is full of crap. If they were making 1,000 pips a month, they would literally be a billionaire within 2 or 3 years, and it's an impossible task to do. So that's the other thing I kind of wanted to share with you is that even in the best of strategies, you make a tiny amount of money for a lot of work with a lot of frustrating stops, and that's what separates the winners from the losers. Yeah, I don't think Sam Seiden makes 1,000 pips a month. Okay, because as I said, if Sam Seiden makes 1,000 pips a month, I would gladly give him all of my money and have him make me a billionaire by the end of this year. Or I would just follow every one of his trades. Okay, but if you believe that, be my guest and follow every one of his trades, and let's come back in a year and see you've made 1,000 pips a month. No, I don't know Mike Maffei. What does Mike Maffei claim? All I know is Boris Schlossberg, and I can tell you is that Boris Schlossberg has traded close to 10,000 trades over the last 10 years, and I have yet to figure out an easy way to make money. So having set your expectations straight, I hope you. Okay, well, let's not get off topic about who's a scammer, who's not. God knows, this is it. The FX business will be here forever if we're going to get into this topic. Let's talk about how we can possibly make intelligent trade ideas, and hopefully find a little bit of an edge in the market. Dan is asking a really, really, really good question. He's saying, do I take accounts into the news, and is it possible to automate the flow trade or the long scalp? Let's take the first part of this question. Do I take account news? I think absolutely news really helps. I mean, it's very hard for me to give you a quantitative answer because news by itself is a qualitative essence, right? I mean, it's not just news. It's what is the news against expectations. It is what is the news within the context of the broader market. What is the news in terms of the shock to the market, in terms of the positioning to the market, right? That's why news is really the art of the game. It's never black and white. It's always shades of gray. And it's just a matter of figuring out whether shades of gray are right or wrong. I mean, I'll give you an example. Those of you guys who follow me on Twitter, right? Let's just take a look at dollar yen, right? So here's an example of me basically, this is a very, very good example of do as I say, not as I do at work, right? I post on Friday that the NFP number, absolutely horrid, definitely sucks. The first reaction to the yen was to the downside, and I said, after the retrace, it really smells to me like they're gonna want, they really held up to 80 first, but then it's gonna rally. They're gonna try to bring it back to 80. So if I had listened to myself, and I just sort of, I never trade yen because I hate the pair. It's so boring. If I had just sort of followed my classic 2-to-1 OO strategy, which is basically where I take a position at 35 or 65, try to run it to the zero, or try to run up to the zero with a 65 stop. If I was able to basically, once it broke through the 35s on a second, flow, gotten short here, by sort of the middle day of today, I would have been able to hit the OOs against what I think is clearly a news supportive environment, right? So that would have been a great trade, and that would have been obviously a very good example of where the news and the technical setup of my long scalp setup really comes in handy. By the way, I'm sort of making an assumption that everybody in this room understands my long scalp setup. Is there anyone who is not familiar with the strategy that I generally use? Do you want me to review it? Okay. All right. So let's just, for everybody who's new here, let's review the strategy. And we're going to do this on the euro dollar because that's the primary pair that I trade. And we're actually going to do this off of the bear with me. Okay, everybody sees that. Just want to make sure everybody sees a relatively tight hourly formation of the euro dollar, right? Okay, super. So the classic long scalp setup of mine is you have to have a move from the 00 level from the prior. This is the long version. The short version is obviously the reverse of it. You have to have a move from the prior 00 level. So from this 45 level, you have to move all the way up to 65. And once price goes up to 65, basically, if you think about it, it's very simple. 2/3 of the way towards the next penny. I basically trade pennies because I believe prices naturally gravitate towards round numbers and it's not that I believe it. There's been a tremendous amount of academic research done on it. Human beings are just generally sort of like order. They like round numbers because everybody trades in pennies, everybody trades in 00 numbers. We price everything in round numbers. So there's a natural motivation, gravitation towards going towards the round numbers. So my idea was to basically build an intraday trading setup around that concept. So generally what I do is 2/3 of the way towards this move on the 00, I would get long. The stop would be at 45, so I'm basically giving myself lots of room for slippage and moving back and forth. And the target is 00. Now those of you who they're psychological numbers. That's correct. They're basically psychological numbers. Those of you who followed me on Twitter on Friday, you saw me tweet that positive development on Greece, and this was I did very well on Friday. Thank you. For those of you who haven't seen my YouTube video, million ways to scalp. It's my latest YouTube video, DK Trader. In fact, let me just wonder if I could just post this over here. It's I think I'm just gonna post my channel here. All right. You can see the latest video, and you can see my NFP trading over there. But my point being is, those of you who saw my Twitter feed, and my Twitter feed, by the way, is @FXFlow. Anybody who's not following me, please feel free to follow me. Friday, I said, positive development on the Greek front, plus POMO. Those of you who don't know POMO is, it's open market operations by the Fed, which means that basically after around 10, 11 o'clock, we had news that looks like they're going to do a deal on Greece. They're going to basically provide second round of financing on Greece, and the market started to rally because the Fed started to basically come in and try to support the stock market after a pretty weak NFP number. And I said positive news on Greece plus POMO equals 146 on the euro. This is when the euro was trading around 145.65, and within this is a 50-minute chart, so it was like 1, 2, 3, 4, 5, 6. It took about an hour and a half. Boom, the setup got done, and obviously the numbers got taken out, and and it was the right long scalp setup. Same kind of a situation earlier we had with the Aussie. Same situation. I mean, this is both pretty much pro risk trades, and this was Friday. So the Aussie spikes all the way down to 106 immediately in the aftermath of the news because the market is sort of thinking it's very negative for the world. The equity prices are going down, the negative risk. But then as U.S. equity prices stabilize, the market begins to realize that maybe it's a U.S.-only problem, and in fact maybe the Fed is going to add more quantitative easing into the equation, more liquidity. More liquidity is obviously very positive for risk assets. We start to rally back up to 106.65, and of course that one actually took out, those of you who saw me post it, that only took about 30 minutes. And we took out the 107 on that one as well. So I will very frequently post what I think are reasonable, likely drivers towards those numbers. Like for example, today this trade is not obviously working out now, but to give you an idea, for example, today the Aussie is rose all the way from 107.65, and this is the 107 level. On the assumption or on the speculation that the RBA may raise rates, surprise the market tonight and raise rates to 5%. Obviously, if they do that, it's going to blow through the 108 handle. But ahead of this number, the market was specking it. And as long as risk flows were supportive, this trade was working. But of course, as the day wore on, we had sort of negative opening in the Dow, negative opening in the negative opening in the Europe, negative opening in Dow. So the thing is still struggling with trying to rally towards this 108. And it may work, may not work. This is a situation where you clearly have a lot more speculation on the news because we do not have the news. We don't have the positive news. We only have speculation of possible positive news. That's why it's not nearly as as certain a trade as the trade that was on Friday. We went from 106.65 to 107. But this is a way to make a long story short. That yes, news does matter. Unfortunately, I wish you could automate everything, but context is so important. I mean, I've had a lot of this stuff back tested, and for example, this setup in the Eurodollar tests beautifully this whole year. This year, you would have made about 700 points so far. 122. This is not even my own testing. My own testing was actually a little different, but the guy who gave me the background testing off the algos, there were 122 trades, 87 positives, 35 negative. All overall, it was about 730 pips year to date, right? So that's this year, and you think, wow, it's a beautiful setup. All I got to do is just automate it, and the whole thing will run, and it's just like making money in the bank without me ever looking at it. But on the other hand, you take a look at 208, when you had an enormous amount of volatility, where the euro had huge ranges up and down. And remember, the death knell of this setup, the death knell that kills the setup, is that when you have a spike up, spike down to stop you out, spike back up, spike down to stop you out, and then spike back up to possibly take you out. So let's say you have two negative stops against one positive TP because of high volatility, then you're minus 65 plus 35, you're minus 130 against plus 35. You do that, 4 or 5 times during a monthly cycle, you get chopped. So in 208, the setup really didn't work very well. But I will say one thing, as badly as it worked, it didn't kill you. In other words, so, it ran minus 150, minus 200 a couple of months in a row. That's not horrible. It's not like a situation where the setup completely blew you up and and took you out on a stretcher. But the point being is that no setup automated is ever going to work all the time, because volatility, context, all sorts of things are just going to interfere and blow you up on the assumptions. So if you were to go with 211 data, you'd be like, this is an incredibly beautiful setup. All I got to do is just automate it, and I'm gonna make 1,000 pips every 6 months. But what if we turn into a 208 environment, and then you're getting chopped up to death, and you're bleeding a couple of hundred pips a month. So that's the hard part. That's really the hard part. I wish I could automate it, because then we could just run it without any kind of input. But I would still say that overall, I think it works more than it doesn't work. The thing that's kind of hard, and this is where the flip side of it is, the thing that's kind of really hard about the whole aspect of human analysis is that human analysis sometimes can be also incredibly wrong. In other words, sometimes one of the things that happens that really drives me crazy, and this is something that you really have to respect tremendously. You have bad fundamental news. You have the UK is on the verge of going bankrupt, right? And the pound initially drops. So you're like, wow, definitely, news is supportive. I'm gonna short the thing. It's setting up as my setup, right? Let's say it goes, it goes to within 10, 15 points of your mark, and then it starts to reverse. Not only does it reverse, it actually stops you out and goes completely the opposite way, right? And you're like, what the hell is going on? The news is supportive to my trade, and the thing is completely turning around. The most intelligent thing you can do at that point is actually join the price. If the news is positive and the price is negative, you always trust the price. If the news is negative and the price is positive, you always want to trust the price. I was using pound as because the pound does this a lot, The thing that's very, very tough to see is that sometimes there's a secondary story. Sometimes there's another story underlying the initial news story that is more dominant. And very often it's not obvious at the first glance. What it is obvious is the price action. The price action is communicating to you something is going on. Something outside of what you logically expect is happening, then you want to pay attention to that. The single biggest mistake that I see traders make is that they only pay attention to their own opinion, when in fact the only opinion that really matters is the opinion of the market. Your opinion is a dime a dozen half the time, and it's rarely going to be smarter than the market. So if the market is doing something so extraordinarily illogical that it's surprising you, and it's stopping you out. The most unnatural thing and the hardest thing to do in the world is to actually reverse yourself and accept the opinion of the market instead of your own opinion. But it's often the best trade that you can make. That's kind of how I operate, because a lot of times, that's what it seems. I mean, like, for example, a very, very easy example of this is the initial trade here is risk negative, right? We have the worst NFPs, the stock market is falling, right? It makes sense that the Aussie is going down, right? But then the Aussie begins to reverse. And the Aussie not only just reverses, but it reverses all the way up to basically trigger a long setup. Now, why would it be positive for risk when the NFPs were so low on Friday? And the answer is there were other things that were going on that were more important. There was the situation in Europe. There was the assumption that it's not just that it's risk negative, but it's actually dollar negative, because it means possibly more QE, more dilution of the currency, whereas the rest of the world has better credit than we do and certainly higher yield, right? So sometimes when you figure out the story, it's too late. And if the price is diverging from what you think is the story, it generally means the price is correct. Great question, Jack. I don't use any indicators on my charts, and the reason why I don't is because I think indicators actually do more harm than good. Remember, every single indicator is a lagging indicator, right? There's no better information than price itself, right? I mean, right now we can see, what can we see? That the Aussie is rallying, right? It's being bid up versus being bid down at this particular moment on the 15-minute chart. So what can a moving average tell me that I can't see myself in the price action, which is the actual price, not the backward 20-period price or 10-period price or whatever is going on, that's really happening. And of course, when you're watching this, it's obviously going to, if it comes up here, back up to the 65 level, what is that going to tell you? It's going to tell you that we're rallied now to enough momentum that possibly, we could have a breakout above this support level, this resistance level. Genie's asking me a really good question. When I do not trade like today, am I trading because there's really no news I see out there? Yeah, it's a very quiet day, and today is a perfect example of where you're going to get chopped up if you kind of try to trade the market, without any kind of directionality. You always want to try to trade news, but by news, let's understand what we mean by news. News comprises of three things. As a matter of fact, I'm actually going to type this out because I think it's so important. You got to, I think you need to understand what news is. Number one, it's echo calendar events, right? Number two, it's monetary commentary from official commentary, right? This is very important. You can have sometimes very good news and some official will, spit the wrong way, and boom, the price will go the other way. And third is risk appetite, which is really, I would say, equity price performance. Sorry, I cannot type. And I think, when you're talking about the idea of news, in a perfect world, you have strong economic data, supportive official commentary, and blowout prices, to the upside or to the downside. And you can go the other way. In other words, negative economic data, depressing economic commentary, and very, very sharp declines in equity prices. Either way, when you have these three elements, it tends to make for strong momentum-like moves. When you think about what I do, basically, it's nothing more than just trading momentum. If you, this is Aussie, but let's look at the euro because euro is my bread and butter trade, right? So this is a 10-day euro, and what I'm going to do is I'm just going to forget everything else. Let's just look at the 00 levels. Let's look at the chart on the 00 levels to understand the sort of the broad mechanics of what's going on. So the euro has gone up about 600 points in about 2 weeks or so, right? And if you look at the chart, you basically see it flowing to the 41, flowing to the 42, correction back up to 41, then flowing to the 42, another correction, flowing to 43, flowing to 44, correction to 43, flowing back up to 45 with a couple of, retraces, flowing to 46, right? If you sort of look at it from a longer point of view, you see how you just have these kind of flows that you want to try and ride when the price aligns yourself. Now, of course, you're occasionally going to get yourself caught where, you have a false flow. This is a flow that just doesn't work and it stops you out. But then typically, a lot of times if you get a second wave, the second wave is stronger and it kind of, takes you to your target. Very similar. I was in Miami Beach, Memorial Day weekend. It's very similar to kind of watching wave action. You get a sort of a slow wave, right? Sometimes it doesn't quite break. And then the second wave comes in and it smacks you in the face. And that's kind of what you want to do. You want to ride that second wave, for the ride back home. That's why you have to relax and not freak out about every single stop, not freak out about every single move. But what you see here, obviously, right, is a very nicely strong trending environment. And my setup, this kind of a flow setup, of course, works best in a strong trending environment. I mean, if this was back and forth, it'd be extraordinarily difficult. I would have to be perfect in my timing. I'd have to step away from the market just at the right time, step into the market just at the right time. My selection would have to be extraordinary for me to replicate the sort of very easy, very kind of a non-stressful positive record you would have had several weeks just trading it to the direction, right? So I hope you understand that it's never quite that simple, but it's really not that complicated. It's simply a matter of trying to figure out, hopefully having the price action in your direction, and obviously having the news flow on your side when you're trying to do this. Any more questions that you guys have? I wanted to just go through the main stuff, but I think we've covered most of what I wanted to do. While you guys are thinking of your questions, let me just show you a variation of the setup. And by the way, as we're talking right now, obviously we see risk coming back a little bit, right? It's funny. I'm just watching a couple of people retweeting my 146 promo mark. But I was going to say, you're seeing risk coming back a little bit, right? You see, the Euro tested 46 came back up, and you see the Aussie now starting to perform just a little bit better. We still haven't broke above the 107.50. Still really haven't taken out a lot of, gotten ourselves back up to the territory where I really want it to be. But the tone is looking firmer than it was just a little while ago. I don't trade exotics at all. I only trade the majors in the OO. And I want to show you a variance of the OO strategy with the pound, because I think the pound is a notoriously difficult pair to trade because of the volatility. But those of you who saw my video, I'm just demarcating the OO marks here. Those of you who saw my video know that one of the things that I like to do is another variance in the strategy is, well, typically you want to, you trade to the OO, but occasionally you also want to see once the price breaks in other words, if you break the OO, you tend to have a lot of times momentum to overflow to the upside or to the downside, right? Once the level is broken, that tends to signal to you that there is negative or positive momentum behind the trade. And I think nowhere does it signal it better than in other words, nowhere is the overflow past the OO stronger than in the pound, which tends to be obviously more volatile than some of the other pairs. It tends to have more continuation. So just to show you, a couple of examples that we can take, and if we start from here, if we broke the OO, if we traded, this is a trade that I trade with 25 target, 50 stop. So here, positive trade on 25 target, right? Another positive trade on the break of the 63, right? Another positive break on the break of the 64 because, my stop is 50 and I'm just breaking it out. I get stopped over here on the first attempt at 65 because I get stopped out at right on target here at 60.50. But I make the second move here. Now what's interesting here is I'll actually trade this both ways. If it goes up to like 40, 45, into the stratosphere and then comes back down to break the OO to the downside, I'll actually take it to the short side because it means it can't hold it. Just like it's the reverse of the idea. If it took the OO to the upside, then I'm going to join it. If it can't hold the OO as support, then I'm going to join the break and sell it to the downside. So here's a trade that worked. Here's another trade that sort of took a while, but actually worked out itself. It didn't stop me out at 50 and eventually broke all the way down. Here's a trade that didn't work, that stopped short, just didn't have enough continuation on the 64 level. Here's another one that didn't have enough continuation on the 64 level, but here's one that broke out, and here's one that broke the 64 today. Again, this one, I wish I'd taken this one. I was just too busy in my Aussie watching that. I should have really taken the break of the 64 on the pound, because that would have been a great trade. So let's just take a look at, what happened here over this time frame. We have 1, 2, 3 negative trades, so minus 150, right? 1, 2, 3, 4, 5, 6, 7, 8. 8 positives. So 200 against minus 150, that's plus 50. That doesn't sound glamorous, but that's how the world works. You basically plus 50 after about a week and a half. That's pretty good. If you have that kind of a ratio for a whole month, you're plus 200 in a trade. That's really great for one single pair. And if I could replicate that, I would do that every single day. Yeah, the euro is obviously running. There's a lot of resistance at this 46.25, 46.40. They're primarily, in my opinion, protecting the 46.50 zone. Also, we also having lots of questions whether the Greece gets done and Greece doesn't get done. Here's my fundamental sort of trade for the week. If Greece gets done, and Trichet says vigilance in his commentary, I'm very confident the euro runs much higher. It could possibly test the 149 level as the week progresses. Let's put it this way: if Trichet says vigilance, and I'm around in my setup, I want to be running the OOs post that setup because I think it's definitely going to want to run the next upward level because that will suggest that yes, they're going to raise rates irrespective of the slowdown in the global economy. And euro gets a huge boost from interest rate differentials. Just like last month, those of you who were with me last month, or those of you who may have read my stuff, I said if Trichet does not say he's going to raise rates, he's going to kill the euro. And if you remember, last month it killed the euro for a good. Like if we go back, let's go back into the euro for for 30 days. This was Trichet. This was last ECB. Trichet saying no, he's not going to raise rates. Look how many OOs it went through. He went 1, 2. Let's just go. This is a perfect example where news and flow really melted together. You went 1, 2, 3, 4, 5, 6. 6 levels before it rebounded even modestly up, and then it came back down again, and it finally found the bottom. So that was good for about 3 or 4 more days of just massive liquidation. You could have run that tremendously. So I hope you guys find that interesting. But yeah, I find 50s are tough to trade. I like them, but they don't have nearly as much of a because they're about a half as valuable or half as accurate or half as powerful as the OOs. So they do not tend to have as much attraction. So I find it harder to trade them than I do the OOs. Anyways, if you guys have any more questions, do I trade dollar Swiss? I don't trade dollar Swiss. It probably is a good trade to make. It just, the key thing I try to keep myself to the pound, yen, and the Aussie as my looks. But the pound Swiss is probably a pretty good trade to make these days because it's clearly a very, very important day. What's a big pip day? Well, this is again a problematic question because there are days where I'll have 100 pips profit because I'll bang 3, 4 positive OO trades, right? But then the next day you could be minus 65. So I like to tally my performance on a weekly basis because you're always going to have losing days, and really want to do it on weekly just to give yourself, not to beat yourself up on a daily basis. I think if you sort of tie yourself to a daily performance, you get yourself killed. You have to have trade on a short-term basis, but look at your account on a long-term basis. I think that's about the best advice I can give anybody as far as, maintaining sanity, as far as your equity goes. Great question from DWT. Would I take short trades in an uptrending environment like this? The answer is I don't know. I've been struggling with that because clearly, the trend is your friend, and the easiest trades to make are the ones where you're trading with a broader trend. But then you're going to get like a turn of broad trend. I mean, if you didn't take if you were sort of only taking long trades, you probably would have missed a good third to half of this turn move because you wouldn't have known if this was a true turn move or just a retrace. So it's really hard. There's not a crystal clear answer to that. Generally, you kind of want to trade with a flow on the broader sense, but when a turn happens, you can make a lot of money on the OO trades on the turn because they just happen so very rapidly. What I would say is, what tilts me one way or the other is the quality and the intensity of the news, and that's really the issue. This was big news, and I certainly would have traded that. I certainly did trade that. Maybe smaller news, I may pass up on the return trade. Okay, genius. So, anyways, I hope you guys enjoyed this. I think our time is almost up. If you have any more questions, I'll be happy to take them. Just to review, OO is a great construct, but not a great strategy, right? Because every strategy has a flaw, and this particular strategy's flaw is that in a high volatility chop environment, it's going to kill you to death because of a negative risk-reward ratio. Trade it as much as possible with news at your back. And be selective in your strategy, and experiment with variations on the theme. Some strategies work better on some pairs, and other strategies work better on other pairs, depending on how you trade it. But if you look at the charts, the key thing that I think will pop out at you is just how powerful the OO is as an attractor of price momentum, both to the upside and to the downside. And if nothing else, it sort of focuses your eye on the importance of where things are going and how things are going to progress. Yeah. I don't do breathing exercises or meditation or drink water. I drink coffee and I lift weights. Lifting weights is my stress reliever. So anyways, I think that's pretty much it. We seem to be in a very, very blasé, choppy environment here. Market obviously, I think, does not really kind of want to rally here because U.S. equities are under pretty serious pressure. But at the same time, it's not quite just the U.S. Negative risk appetite as a dominant factor. It's sort of negative risk appetite versus the possibility of tightening by other central banks, despite the fact that there is slowdown in the world. And I think that's the nuance in the fundamental news that we're going to be watching very carefully. I mean, tonight, if the RBA comes out and says, we don't give an F that interest rates are going to that the world is slowing down, we still think price pressures are really important, really significant in the system, then the Aussie rallies. If on the other hand, the RBA comes out today and says, we consider price to be appropriate and don't really see any immediate need for tightening, the Aussie is going to flush because there's two things that's going to happen. Number one, the market is obviously going to realize the RBA is backing up. More importantly, they're going to fear that the RBA may have a forward look on the Aussie employment data, which comes out on Thursday, and that the data is very negative, and that will be like the nail in the coffin. And you could have a whole unwind in the Aussie, possibly to the 105 level, on the assumption that that this is it for 2011. Remember, Aussie at 110 only works if we get 5% money. So the market has to be convinced that we're going to 5% in order to rally to 110. Sorry, let let me post the YouTube link again. And of course, those of you who want to visit our signal service, feel free to visit us there and check out what we do there as well. So I thank you very much, guys. Fun as always. Feel free to email me on the website at bkforexadvisor.com if you have any questions or if you have any ideas or variations on the theme. I'm always looking for new creative ways to adjust. And just remember, 200 points a month and you're golden. So set your expectations in the right fashion. My favorite thing about Miami Beach is 87-degree water. I love Miami. It's my favorite place in the world. And that's all I'm going to say because I went there with my girlfriend, so I will censor myself from any other comments. No, it's a great place. Anyways, guys, thank you again. And I will see you guys next month. I'm going to be around this whole summer, so we'll hopefully get to see a lot of trades in action, and we'll see how everything flows out. All right? Just remember, let's hope we're in the know and the flow. And everybody who has not yet followed me, please feel free to follow me on Twitter because obviously I will post there very frequently as I always try to do. Take care, guys.